There we go.
Awesome. Okay, so without further ado, I'll be giving the floor to you, Paul. Mhm.
All right. Well, thanks for joining us. Really excited to have you guys on tonight. And just thank you for the introduction, Michelle. Yeah, we're really excited about this deal. And once we get into all the details, you'll see why. Um, Before we get started, I'll give the disclaimers. We're not attorneys, we're not lawyers. Make sure you get advice, from your legal counsel, from your accountant on things. Um, uh, so, so just wanted to say that. And then before I get into the deal, I want to share with you kind of our track record and kind of where we're coming from. We've got, well, let me share my screen here. Okay. Okay. So La Jolla Place. Oh wait, I'm supposed to tell you about ourselves. So here goes. There's a disclaimer. Okay, so here are our three kind of leads in the deal. We've got Sharif, who's on the call right now. He's in the airport right now, so he's on here, but he's just muted, and we'll have him jump off or introduce himself a little bit. Got me, and of course Christie Oldham. Um, I've been in real estate for a long time. Got started in 2001. Um, I've done 19 commercial projects, mostly multifamily. I've done, but also have done land development, office, retail, but mostly multifamily. Develop, land developments, and then also have done roughly 75 single family uh, uh, property flips, rentals across the United States. Sharif, he's done 26 commercial projects, mostly multifamily. He had an impeccable 10-year history career at a multifamily acquisitions company. And after he made millions and millions of dollars for his owners, he's like, man, we should do some of these deals. I should be doing my own deals instead of making somebody else wealthy. I should make, work on, you know, building my own wealth and building wealth for my friends and family. Um, and so we're excited to have him on the team. And Sharif actually found the deal. And then we've got Christy with 23 years as a professional asset manager, regional manager for some of the biggest names in the industry. And she's very well qualified, and we're really excited to have her on the team. Um, she specializes in asset value development while maximizing owner ROI and operational efficiencies. And then, of course, we have Michelle, Mary, Mike, and Coop, um, and uh, and Naeem, that are also helping us in their capacities. So I think we've got just a rock star team, and uh, and so we're really excited about what we put together, and how this thing is penciled out. And on the next slide, here's a little bit of our track record. We um, so this is Sharif's. Mine looks similar. This is all in the pitch deck, just to give you an idea, the kinds of stuff we work on. This is stuff that we do every day, all year long. Christy could put ours up, I could put mine up, and we would probably have over 100 deals between us, maybe. Um, so there's our track record, few photos. So let me give you the story of La Jolla Place, kind of how we found the deal, what got us excited about the area. Um, this came about from broker relationships and relationships with other owners and people in the business. Sharif came across this, and I don't want to steal too much of Sharif's thunder, but so I'll save some of it for him. But this has been self-managed for 10 years, almost 10 years, by the owner. Um, and we always get excited when we see a property that's self-managed because there are so many value add opportunities, so much low-hanging fruit. And that's Christie's thunder, so I'm not going to steal that. But we've got some exciting value adds. There's always a lot of meat on the bone. Nearly always, there's a lot of meat on the bone when we're buying from somebody that's owned it and operated, self-managed it for a long time. We did due diligence, and this thing, one of the good things is about you know, uh, being self-managed is sometimes they take really good care of the properties. And that's what we found here. In fact, in all the due diligence, and we went through every single unit, checked, yeah, checked, we went on the roofs, we checked the mechanicals, the plumbing, just everything, very thoroughly. And in all of that, we and the property managers and the vendors found like $65,000 worth of repairs, which is almost nothing for a property of this size. And to offset that, we were able to get a $75,000 credit from the seller. So, to more than offset that. So super, super clean. Our property manager said that this is one of the cleanest lease audits that they've ever seen on a property. So we got property managers excited. Christie's excited. We're all excited about this because there's just so many good things we can do here. And Sharif is in the airport, so it's probably a little bit noisy. Me and Sharif were together today. He was at the property yesterday. And so Sharif, do you want to, if you can, do you want to just talk about like why El Paso and like why are you excited about El Paso?
All right, hi guys. Can you hear me all right?
Yep, we can hear you.
And all right, good, good, good. Yeah, so thanks again, everybody. I apologize for any background noise. I'm in an airport. Like Paul said, I've been doing this for 10 some odd years, working at a former sponsor. And one of the jobs that I had was to do uh, some macroeconomic analysis about markets to invest in. So I came up with this analysis to look at 85 different MSAs, um, and see if I can actually. Can you send the share over to me, guys? Or
Oh yeah, yeah. Okay, you should be able to share.
but anyway, so I did this analysis to look at virtues of a market that would be attractive to an apartment investor. Uh, in a very noisy analysis, it kind of looks like this. If you guys can see my Excel, but essentially it's 120 different columns of data across all these different MSAs. I'm sorry, this is a very quick and prompt presentation. I just got off a plane just a short time ago. But the point here, ladies and gentlemen, is that El Paso has ranked in the most recent analysis as number 4. Far higher than a lot of other markets, the big ones like a Phoenix or a Vegas or a Atlanta or so forth. But so when I came across an opportunity through a broker to look at this deal, it did particularly get my attention. In the former gig, El Paso has consistently ranked as one of the top markets. But one of the issues is that it is not a market that's got a lot of trades that happen every year. So it wasn't of interest to them. However, for our first deal together under Falcon, this is a perfect, opportunity, and that it's not even a 1990s deal or early 2000s deal, but a 2012 deal in a strong market without the institutional competition oversupply. Anybody who's been around the room for a little bit does not like situations where it is me and you and 20 other people all outbidding each other, trying to bid up the prices in a crazy, irrational way. This is a market that doesn't really attract the big REITs or institutional investors. So we're able to squeak in, get something at a good basis, good returns. So that's one of the major, major things I like about it. I just extracted now from that big fat analysis, like why El Paso, Texas really does differentiate itself compared to other markets and that 85 market study that I did. So, of note, just about how I'm looking at the rent growth across the next couple of years as forecasted by Yardi and CoStar. And it's rather commendable that the forecasted rent growth is 70 basis points higher than the average of all the markets that I'm looking at. Another one I look at is it kind of a measure of like the future cap rate. In other words, like what are the cap rates, forecasted in those markets right now, plus the rent growth that we're expecting in the future. Again, El Paso is coming out on top. One of the huge things that impacts all of those rent growth or results in those rent growth numbers has to do with the balance or the imbalance of deliveries versus absorption. So in this case, the study is saying that there's basically twice as many units supplied versus those needed or demanded in the market versus a ratio of only 1.5 in El Paso. Vacancy was also one of the huge factors that really drew me not only to El Paso, but to this deal. But it was just so comforting when I started looking at this deal. It was basically running at 95%. That's great. But then I also look back to 2021. It never went below 95%. And then I started doing, normal stuff at acquisition, started looking at rent comps. Every single one of the rent comps was between 95 and 100% occupancy. Just telling me strength like crazy. This other factor is the historical rent growth, basically looking backward. So again, it could be, like I anticipate, say, like a Phoenix or a Las Vegas sometime soon will have outstanding rent growth going forward. However, right now, the rent growth looking backward is negative in a lot of cases. But in the case of El Paso, it is firmly positive. Under construction versus existing units, again, El Paso does not have the problem, the hangover of oversupply. Niche list. And so today, really excited to announce. I know David gave that teaser last night, but I'm hearing somebody else talking. But anyway, under construction in El Paso, far less as a percentage of all the units in the market versus, again, the 85 other markets. And last but not least, median household income growth is stronger than all the averages. In short, real estate is all about location. I think some of these points here I have on the board here are showing why I'm very comfortable acquiring this property, working with this great team, and delivering great returns for our investors. All the noise in my background, Paul, I got to hand it back to you guys.
All right, thanks. So yeah, so you can see why we're excited about this. I mean, high occupancy, limited supply. There's, very little in the pipeline as far as new construction goes, but El Paso continues to grow, incomes continue to grow. And this is one of the few markets around the country where the occupancy is so high. And Christie, you can amen to that, right? I mean, you look at some markets where, that were once at, 92, 93, and now they're sitting at 87, 88. El Paso has been sitting at 95, kind of this whole time, through the ups and downs. It's just always, been really resilient. So, Yeah, so let me share a few rent and sale comps um, that you might find interesting. Let me see. I think my sheet, yeah, my screen is sharing. Okay, so here's some I'm gonna move my things away. Okay, rent comparables. So we've got some different rent comparables that are um, well, actually, this doesn't have the pricing on it. Um, well, uh, oh, yeah, okay, there it is. Okay. So you see at the bottom of the page, you got Bella Vista, Casitas, Las Norias, Summerstone, and then La Jolla Place. Um, and you can see they're 1184, 1295, 1370, 1250, and we're sitting at 1087. Um, and then So, I think we've got some room there currently. And when me and Sharif drove the comparables, walked the units, talked to the property managers, and saw what they were offering, we're like, man, we've got some room to grow here. I think this is in a good location compared to some of the other comparables. And I think that'll bode well for us. And then as far as sale comparables, we're seeing things trade um, for a higher price per unit, higher price per square foot. Um, so I think that we're going in with, kind of, already halfway to first base as we're going into the investment. So yeah, and oh, one thing that Sharif probably wanted to mention that he's really excited about this, and when I found out, I was like, wow, that's amazing. Um, so Sharif has always looked at the crime risk score. And if any city was under 30 on a scale of 100, 100 being the worst, most dangerous place, zero being, the absolute safest place, kind of the bar that he set is 30 or lower is a market they would look at. Um, El Paso ranked 17 on the risk safety score. So it's by CoreLogix. So, that just kind of shows what a safe, good area this is in. So and I wanted to call Christie and just see if you could share with us kind of some of your thoughts on, what's the value add? What do you see here? Why are you excited about the property?
Yeah, thanks, Paul. Can everybody hear me okay? Awesome. So my name is Christie Oldham. Nice to meet everybody. Thanks so much for joining us. A little bit about me. I've been in property management, primarily operations and training for just about 24 years, and have been in just about every role, or have trained just about every role in those 24 years. So when Sharif asked me to partner my asset management company with Falcon, to oversee this deal, I was really excited. So El Paso is a phenomenal market that we've looked at for a long time. It's that metropolitan, but not quite a million people type city that has all the big things you want and none of the big things you don't need. And so we really do like the El Paso market. The stability of employment there is phenomenal. They have a huge military presence, a huge healthcare presence in their employment. So there's a lot of stability, which we really love when we're talking about, lower median income demographics of residents. And this is an area where they have a lower median income than, our big cities like, Phoenix and LA. They just have higher median incomes. And El Paso is going to be kind of that middle apple. The other thing that we really love about specifically La Jolla is the low hanging fruit. So when you take an asset that has been self-managed for 10 years, has had the same manager in place for 10 years, you are always going to have a level of complacency with improvements, with rent growth. You have the emotional attachment to your residents, which does inhibit your ability to return your investment. So this, like Paul was saying, this property does have market rents currently that are significantly below its comparison properties. Um, so we do believe that, right out the gate, we're looking at, adjusting their classic market rents to something a little more appropriate. The other thing is the comparables that we're talking about are not renovated product. So we are going to be doing a value add program on this property that we do believe will warrant a fairly decent premium on those units. That is not something that the neighboring comparables have really adopted into. They're certainly doing, basic upgrades, but we're going to talk about a level of upgrade that really does refinish the entire unit and give it a completely brand new look without a completely brand new price. So we're going to have a lot of work ahead of us, but we do believe there's a lot of immediate out the gate ROI with just basic efficiencies in operations. So we've brought on FPI, which is a national property management firm, but they have a phenomenal presence in El Paso. And they are a company that does extremely well in those tertiary markets like El Paso, Albuquerque, Tucson. They have a lot of really good experience in those markets. And so we do think that their presence there is going to bring a level of fundamental improvement to the platforms that are in place, the systems that are in place, and the management that's in place. So I think that we're going to have an immediate improvement with just our professional oversight there. A lot of things that the prior owners have not done, pet rent, utility billing, assigned parking, covered parking. Like these are all pieces of these are apples that are ready for the picking. And so we have those really immediately ready to be rolled out as soon as we close the door. So we're really excited about this opportunity. We're really excited about our new staff coming into it and about FPI's oversight. And I'm not sure I could say anything else better about it, but worked with Sharif for about 10 years now on just different deals, and he has an incredible eye for these types of assets. And like I said, he made money for somebody else for a long time and didn't have a bad apple in the bunch. So I trust when he finds something, it's for real. So really excited about this asset. And I'm more than happy to answer any questions that you have about operations.
Awesome. Sounds good. Thanks for that, Christie.
Of course.
Yeah, and thanks for saying something about the renos because original finishes. No, it's built in 2012, so like the place still looks pretty nice, but we're going to do some light refreshes and try to up level it. Minor upgrades that can make a big difference. And then all the ancillary. Currently, they are charging 0, I believe, and you can correct me if I'm wrong, but I think we're getting 0 in pet rent currently. And
yes, that is correct.
That's it's like wow. I mean, we got a lot of just low hanging fruit, like you said. The pet rent, trash, pest fee, just and then some minor upgrades, small upgrades that'll make a big difference. And that's something we can force the appreciation with. Because if you're new to multifamily, it's not like single family where it's compared to the property down the street that's sold. It's based on a multiple of the profitability, or which we call a cap rate, a multiple of the net operating income. So when we do these things, we can actually force the appreciation. And
pretty immediately.
Yes, immediately. And I won't go into examples, but Michelle is partner on a deal in Central Texas with us that we bought actually last October. And, within a year, we've increased the value of the property. Well, we'll say quite a bit. We'll say we've improved it a lot. So let me show you what a kind of an investment with this what it would look like. Because I'm sure, some of you are wondering, okay, if I do invest, like what do I get out of this? So here's a sample cash flow and return summary for a $100,000 investment. The minimum is 50,000. But to keep it simple, $100,000 investment, what does that look like for you? Well, year one, we've got 4.7% cash flow to you. You invest 100,000, you get $4,700 in year one. And what we're doing is we pay quarterly distributions. We're not paying it the first quarter, pay a half a distribution the second quarter, and then go into full distributions on that. Now, this is something, and Christie, you can chime in on this, or Sharif, like a lot of multifamily acquisition companies are not paying, they're not able to pay distributions from the cash flow of the property immediately, like we're able to. A lot of them they're either, holding them off for a year or two, or, and this is something they shouldn't do, but some of them will even raise more money so that they can pay out a return. They're not supposed to do that, but this one is cash flowing enough that like we're able to pay immediate cash flow. Almost 8% year two, year three, year four gets up to almost 9%, and just keeps going up. And then, so during the course of the ownership, we're projecting about 50% of your return to come from just the cash flow of the property. And then at the end, then when we sell it and we capture that value add that we've pushed into this property, then you get your return back with, even, more back on top of that. So we're projecting to more than double our money. And, when you look at our track record, this is a typical deal for us. And fortunately, this is how a lot of our deals look. We project this, and then, we just do work our hardest to try to even go beyond that and, under promise and over deliver. I'm going to share with you the pro forma page. There's a lot of numbers on here, so I'm not going to get bogged down on this because we can talk about it for like an hour. But here goes. Here goes. Now we have like, I don't know, 45 pages of stuff like this where we have drilled down so deep into the monthly of each year, just looking at everything this from every angle we possibly can. Sharif is such a numbers junkie nerd. I don't know what you want to call him. And Christie is too, digging into these numbers, just, trying to make sure that your investment is safe, my investment is safe, and this is going to do what it says, what we say it's going to do. So we've worked really hard into looking at this. And so yeah, so there's pro forma, and I'll go back one page. This is pretty exciting. After we got this all ready, got this presentation pitch deck done, we found out that our taxes and insurance are actually quite a bit lower than what we had projected. So the numbers are going to be higher. Not sure what they are, but we got a hard bindable quote for insurance that's just going to push those numbers up even higher. So I want to open it up right now for questions. Oh, and let me tell you kind of like what the next steps are. If you're ready to move forward with us, then we've got an online portal. You get with Michelle, Mary, Mike and Coop, whoever, or me. Just on the next steps, we'll send you a link to the portal. You put in your information, sign the subscription documents, and then you have an opportunity to either ACH it or wire it. And then we can take, just cash from your account, or we can take IRA, funds for the investment. So yeah, we're love to have you as a partner in our deal, an investor in our deal, and, kind of show you what we can do, and just kind of, get to work doing what we're do best. So yeah, so I'll open it up for questions. If you have questions, you can drop it in the chat, or you can just raise your hand. We'll let you speak.
All right, no questions so far. Any comments about what you just heard about the deal?
While you guys are getting your questions ready, I want to share something with you that I thought was really interesting. Me and Sharif were sitting in the office with the owner, with the current manager, with our property manager, and the maintenance people, and there was about, I don't know, maybe 10 of us in the room. And Sharif said, you know what? This was before the election, and he said, "What do you think? Like, what do you think is going to happen based on the election?" Now, I'm not getting political here, but I want to share with you what they said. And I had no idea. It's like, who knows what they're going to say? Who knows who they're voting for? Who knows how they feel about it? But you know, like the entire room was unanimous that things were really good when Trump was in office, and they were hoping he would get in for the simple fact that so many jobs were coming to the area. I thought it might be the other way around. Trump gets in and, it's gonna, the border towns are gonna like kind of shrink up or, die down a little bit. But they said the economy was so strong when Trump was in. So they're like, we're hoping he gets in because like business, the demand for housing, the jobs here in El Paso are just gonna like explode even more and, just create a really great market for us. And that'll benefit, you know, the new owners of La Jolla. And so it's like, oh, okay. So that's
What I love about that is that the entire mindset, regardless of their political affiliation, is that their goal was to benefit the future of La Jolla. Like the maintenance staff there that will be staying on board with us has a lot of time invested, and he's got a lot of history on the property, and he's really excited to see the changes come through. And he's excited to see a refresh happen and some additional support from having a sophisticated property management company in place. So they're really excited about that as well, and the team engagement on the ground is a key for that property's future success. So I think we're really excited to have that.
yeah, good point. So no, if they had said if Trump gets in, it's the end of the world, we're gonna have to close the place down because everybody's gonna move back to Mexico, then it'd be like, oh, okay. But so anyway, so that's where we are. Yeah, so if you have any questions, please speak up now and raise your hand, send it in the chat. If not, you know, get the portal link and we can get you in there. We're set up to accept soft commits, like commitments. And then as we'll be uploading the subscription docs over the next few days or week or so, then you can actually sign them, get your get your funds in. And
Yeah, Teresa, I see your question there. That's a great question. We did go over the numbers, and I think Michelle is going to send out the video again, so you'll be able to look at that or review that when you have more time, and how the payouts work is included. But ideally, we would love to start paying investor distributions by Q2, possibly Q3, but our goal is Q2.
Hi, this is Roselle Branch. I have a question for you. The pro forma, do you have an example of one for 50,000? And did you say that's the minimum
yes,
for
50,000
investors?
yes, 50,000 is the minimum. And it's going to be the same deal dynamics as it is for 100,000, just cut in half. There's not like special treatment for someone that puts in 100,000 compared to 50,000. So it's going to be the same 4.7% year one, 7.8% year two, 8% year three, 8.9% year four, and so on. Still targeting to 2.26x your investment over the whole period. So yeah, it would be the same there's not a different like
Yeah, the
different
dollar amounts
percentages.
just cut them in half. Dollar amounts cut them in half. The percentages would all be identical. Percentages of IRRs would all be identical.
Yeah, I'll say this that your ownership is not, like this is not like a loan to, Michelle or me or, this is not a loan. Like you would be an owner, a part owner of the property. And so at the beginning of the year, you'll get a K1, which just, simple document that goes along with your tax forms. And you get the benefits of investing in real estate, but without the hassle. So like you get the depreciation, so you get the tax write-off from owning this. We will do a cost segregation study to accelerate depreciation. Your income is typically offset by the depreciation that we get every year. But then you also benefit from the appreciation from this thing going up in value as we, optimize it and push the value on it. So you can, I don't know how many of you guys have owned like single family rentals, Airbnbs or whatever, but those for me have not always been passive. This is a true passive investment. That you've got just some people that love doing this, you know, overseeing your investment. We'll send out quarterly reports just showing you, like here's the progress, here's the information. For those of you that want more information, we'll send out, financials or whatever, um, along with the newsletter. Yeah, and then of course we're always available to, discuss, just how it's going. So yeah, excited to have you on board. If you don't have any more questions, if you do have any more questions, get with whoever brought you on. And then we'll get your questions answered. We'll get you a link to the portal. Michelle, I guess let me see, we got a few emails dropped in here. So we can get you the pitch deck. Sharif dropped his number into the chat. I'll put that in there. You can, of course, you're welcome to, ask us any questions you like. Yeah, so if that's no more questions, then appreciate you joining us, and we're excited about getting this thing closed here.
We really appreciate everybody's time. Thank you so much.
All right. Yes, so just really quickly for my investors that are here, I will be sending you guys like a follow-up and send you guys again the pitch deck and also the link to the portal. So for those who are ready to get started, we can I can help you with setting up your profile on the portal as well. And of course, this is not, like the only time that we're going to talk about this. We can do follow-ups. You can have more questions answered. I'm pretty sure that you'll have more follow-up questions. We're here to answer all of them so that you can be comfortable with making your decision to partner with us or not. Hopefully you will partner with us because this is a really great deal and we are a really great team and you can count on us on it.
Thank you so much, Michelle.
Yep. Thanks, Michelle. Thanks, everybody, for joining, and we'll look forward to talking to you soon.
All right. Bye. Thank you.